All right, so I'm going to go over this. I don't know, I forgot where I got in. Oh yeah, okay, all right. So market went down, right? And what's important here is when you see that this is 351, 270, 86, 28, 20. What is this saying? Weakness. It's getting weaker. The pattern is very clear. 351 to 270 to 86 to 28 to 20. Supply is getting weaker. So where I'm marking the arrows, and I'll do it again, just to show. If I show you a number 35, 20, 270, 86, 28, 20, would you say it's increasing or decreasing? It's decreasing. Every time the down waves are getting weaker. So selling is getting weaker. And then over here, this is where demand gets stronger. So selling gets weaker and demand gets stronger. Very evident because that's what's going on. You have weakness here. You have a bunch of weakness in the background. I mean, you have supply getting weaker in the background, then very weak here, and demand takes advantage. Then finally, you have one pullback. It holds, means higher low, even though it's a big wave and there's pressure there. Finally, one more where this is really the lack of supply. And then from there, you have the higher high. So if I was to label this, it would be like that. So trend is created. Why? Well, first of all, demand has overtaken supply. How do you know demand has overtaken supply? Because you see the weakness in the background in supply and strength in demand. So when demand is stronger than supply and the up waves are bigger in distance and duration than the down waves, you have a change in trend. So the only question is, how do you get in and how far will it go? And probably whether you're going to get filled or not, depending on how much risk you're willing to take and all that. Anyway, so here you have the trend confirmation. Now there's one more strong attempt to sell, and after that you might be, taking a look at this, you might say, okay, this is not good. So you just wait, and you see the up wave after that confirms that this is nothing more than a sell to buy. This is a sell, that's a buy. So the selling pressure in order to buy it. This happens all the time in spring maneuvers. All right, so remember, you have selling pressure. It could be for many reasons. One is profit taking. 2 is a sell to buy. 3 is a test, meaning there must be a breakout level or something, and they're pulling back to test that level, and then they'll go up. So these 3 situations, you can have selling in order to go higher. The first is profit taking, and after that, natural buying results. The 2 is to test. Some people say it's because of mitigation and all that, but here's the facts. At that breakout level, there's almost always a lot of volume. So when market go down, it's looking for demand. So where is it going to find that demand? It's going to find it at that breakout level where there's heavy volume. Not only because of folks who took the other side that want to cover their losses, right? But also because of new longs wanting to enter against that area, knowing that there's going to be demand there. Why? Because there's stuck supply, there's bag holders. They're not bag holders, what do you call? Traders that are underwater there who would want to exit at break even. So that's the second. And finally, the third is sell to buy. And fourth is what? Actual accumulation and distribution. And that's a different story. But in here, you have that buying, the weakness, then after that, confirmation, pull back. And if still unclear, just wait for it and bang. Look, sell to buy, heavy buying. And where you can even see the print that there's heavy buying, which is this pressure right here. They say the biggest volume in about 10 waves. And against this area, you because this is the biggest volume in about 12 bricks. So around here, the market should hold. Now the market pulled back, pulled back, pulled back. Here on this brick, it was evident because this brick is funny because it has more volume than any other brick in the consolidation in this box from the, not the 8, but right about around here. So I'm watching this knowing that it's trying to test, it's trying to push, but there's like a wall here. They're trying, there's a wall here. And instead, they have to go the other way because they cannot take it down anymore. So they go the other way, and that's your breakout brick, and of course it's going to hold, come back, doink, test it, and then goes. And the entire wave has heavy price volume. This is where it becomes ultra clear that they're going to go higher. You don't get in here, you can get in here against this brick and stop below the low. But this is a good breakout brick because it has follow through and all that. One thing is, obviously it's not always not always easy, and you might get scared because of that heavy volume off that high, right? So I don't know what to do about that other than say, look, you have all this base, have all of this and that, just expect a lot of times when it hits a high, there's heavy selling. It could be for many reasons. There could be a level in the background. Oh, there is a level in the background off of this high, right? So that's, sellers are usually there off of that high. So that was your climax up here, and we tagged it, and there was selling, but it didn't have any follow through. So just expect things like that happen, and that's why you need selective judgment. It's not easy because of that. But if you're looking at this and you're looking at the 5 and the 14, you think the 14 is going to be overwhelming supply at resistance, that's going to go lower. That's what most folks would think. But what you see is not only the 14 in that brick, 1400 contracts, but the entire damn wave. So understand that we're not just looking at individual bar comparisons. You look at the wave. This wave is the biggest wave in 26 wave with the biggest volume in 13 waves. So you're weighing the evidence and say that supply, although it's a lot, on a brick level, it cannot match the wave. And it's only enough to sell off the resistance area to bring it back down to test the breakout where you get the move. All right. So now for the reading, you got 93 stocks that go up. Pull back on 70 stocks. Here's the weakness before that where you have 270, 86, 28, 20. Here is game over. Why? Because supply dried up here, demand came in here, right there, and then again supply dried up right here. Lack of supply before the demand and on the second wave after the demand, confirmed by higher high, which does what? Establishes trend. Lack of supply on the down waves, strong demand with the higher high. The up waves are bigger than the down waves. Trend is going to happen. Yes, it's not always clear, especially after this selling wave. But after that selling wave, you see it was a sell to buy situation where when 71 stocks sold down, only for 95 stocks to go up on 8 minutes. And then it's off to the races. Where should you get out? Right, that's the next question. It's a tough question because there's a lot of expectations and all that. But in this case, it's very clear that the big warning sign was here. Why? Because the selling waves are getting bigger. This is about 45 or 49 stocks, which is the biggest wave in 5 waves. So selling pressure increase on more price and time than all of these 1, 2, 3, 4, 5 waves. So that's it. You need to, when you see that, you look here and you see big red and say, oh shit, supply is in the house. Right there. right there. Supply is a situation right over here. Then it does an up thrust and goes down. All right. Over here it goes down 193 stocks, pull back on 32, 121 stocks, and here 96. 96 pick up right there. 96 greater than 32, 44, 71, 80, 16, 83, all the way back to about here. So that same level that initial buying occurred, there's still buyers there. That's what this means. So here, buyers are buying stock. So they buy stock and look at the selling wave. What happens? Only 21. So 96 buy, meaning 96 would go up and pull back. 21 stocks pull back, and you get a nice little, nice little bounce rally here. Then it does all of this. It just goes down to do a test, right? And here it's confusing because, again, there's times where you have selling waves and there's sell to buy, right? How do you know not to short? How I know not to short is because when it pulls back, there's still demand there. It's not weak enough for a turn. You don't just need weakness, you need a lot of weakness. And this is, yes, it's lower than the prior wave, but it's bigger than 1, 2, at least the prior 2 waves is bigger. The demand is still there. And then it rallies. And after that, the selling pressure kicks in a little bit just to cause a pullback to test. Lo and behold, to test what? To test this area and rally. So there's a number of things to talk about. From psychology, when you hear that you're fighting yourself in trading, a lot of that is true, because I've seen folks that they work too hard or they're very smart, and what they'll do is trading will make that against you. Meaning, I've seen individuals build over 100 indicators. I've seen individuals build entire platform, coming up with new approaches every 3 months, 6 months. This is how trading will turn your abilities against you. Meaning, if you're hyper intelligent, you're not going to trade something simple. It's not going to happen. If you're, I don't know. So the point is that, yes, it's trading your personality and all that, but there is a natural sabotage within trading, a natural way trading will sabotage you. And until you have an awareness of that, you cannot be successful as a trader. Until you realize that there's the psychological component which specifically uses your strengths against you, you cannot be successful as trading. Because as soon as you give into that, you start doing things like creating a lot of indicators, if that's your personality, or some folks, what they'll do, if they're hyperachievers, is not only will they look at trade one market, they'll look into options, they'll look into Forex, they'll look into Elliott Wave, they'll look into Wyckoff and Gann. So this is how the sabotage occurs. Anyway, long story short, just whatever it is that you're inclined towards, you just have to stick with that, and also having a development, an understanding of your weaknesses, because somewhere down the line they will come into play, and they will come into play either in the trading or in changing or attacking consistency and discipline, right? Because that's what happens. Anyway, long story short, have a good weekend. And if you want to know more about this, you can go and read up on Wyckoff wave chart. Look at his original works. In his course, there's example there. And whatever you do not go online to stockchart.com. Look up Wyckoff. All right. Anyway, take care. Bye-bye.